Good morning, everyone. John471 here to discuss the S&P 500. Today is Thursday, May 29th, 2025. Allow me to read our disclaimer. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Let's move on to our news, as we always do. As mentioned, today is Thursday. What do we have today? Beginning at the 8:30 hour, we have GDP and jobless claims. We also have Thomas Barkin speaking at that same time, so fair amount of data hitting at 8:30. We also have the PCE component of jobless or of GDP. Pending home sales is at 10 a.m. Eastern. We also have Austan Goolsbee speaking at 10:40, and we have the EIA petroleum report at noon for crude traders. There's a White House press briefing at 1. We also have a 7-year note auction at 1, as well as moving on to the afternoon. Kugler at 2, speaking at 2, and Daly at 4. So fair amount of data and speakers today. Let's move on to our charts. Okay, we won't spend a lot of time on this chart today. This is the daily chart, full session daily chart. The big narrative that's going on here just really hasn't changed, and that's that it is 58.21 bid. What does that mean? It means we're in this area right here trading this. The 58.21s are the important price for me in this area, and they are bid. They are support. They are people want to buy them. When we push down and somebody tries to sell them, they get bought. So it's 58.21 bid in this area of balance here. The big target, if we were able to push through this area, I noted was the 6,000 figure. And above that, we have the 60-30 HVN region and a lot of other stuff that we talk about on the next chart. 60-30s are around here. That's the next landmark on this time frame. We did actually get a test of the 6,000s after the bell yesterday. It was on news. We'll discuss that more on another chart. Let's move on. Okay, here's our market profile chart, RTH only. And this is kind of showing that little island area situation we had. I talked about it yesterday where we hadn't really closed off this area below. We pushed above, and then we sort of had this area below that is not very well auctioned. But when we push into it, we see that there are still buyers present. As you can see, value moving higher. Then when it pushes down, it's like we fall through here, but then it gets really hard to get any further, and we just pop back up, thus showing support. Looking at these 2 days, yesterday, 2 days ago and yesterday, we began the week rallying higher. We left a gap to settle. Decent excess on this low, and then we pushed above yesterday, decent excess on this high. The expectation, however, though, if based on what we're seeing right here in a vacuum, for me would be that we had just rejected higher prices and would be more likely to push to test maybe this area. But we had some news drop at the end of the day about a court blocking the tariffs, and we got a pretty strong response higher out of that. Everybody that kind of thought that we were going to do what I just mentioned is possible, instead found themselves totally upended and had to rush to cover shorts. That rush, as you can see, pushed the full session high up to 6,008, thus getting that important 6,000 test overnight, which is the way stuff happens quite often. But anyway, just from this, so we know that we've pushed higher, we've expanded prices overnight, and so depending on where we open, yesterday's high is going to be super important. Our balance high over here is going to be super important, and the overnight high is going to be super important. So we're going to have all of these areas that will be important today. Let's move on to a smaller time frame chart and discuss specific price action. Okay, here we go. So this is an intraday chart. The lavender areas are full session. So what's going on here? we see yesterday's trade where I was open to the continuation higher to take out these naked VPOC areas. And we were able to take out one of them during RTH, and we didn't get to the other one. What this really ended up looking like was, I remember yesterday I kind of drew a box and I said, let me get the color correct here. I drew a box around here and I was like, I was pretty bullish yesterday, and I was like, unless everybody has a bunch to sell right here. And that ended up actually being the scenario that was most close to what we actually got, where we pushed up, got the initial target, and then just, it was like exactly kind of the situation that I've been describing, where offers just line up and produce this this just like grindy. Look at these like here, here, and here. To me, this looks very programish, like a we push up to here and some sell program just loads the offers to try to sell as many of whatever they had to do up there. Just the way it kind of, just a very algorithmic grind lower. And then right here we see this is a place where, as you would expect, there was some buying activity, some short covering. These were both great trades. Pull back to DGPs, one of the really great ones we like to trade. But you know, attempt here by buyers, it just failed. And then you see the release lower into the close. These area of singles, mentioned these yesterday. I said I did not expect these to get taken out, and technically they didn't, but they got pushed into a lot more than I expected. We got right to the low almost, but still left some. And then what happened was the news happened and we just ripped. The SOCs, there's two real SOCs here, because the news came out at 6:36-ish, or no, the news came out at 7, which is right there. But the reaction started in here at around 6:30. So to me, this whole area is an SOC kind of range. This whole area, basically to close the gap, is an SOC range. And you see that we're trying to do that right now. But anyway, so based on that, let's begin our discussion of what might happen today. Rather than a bullish or bearish idea, let's just discuss the landscape here. We have a distribution right here where we pushed up into all these important prices I've been talking about. We tested the prior week's high overnight, tested Millennium, and then we just started falling. But there is some volume was done up here, not a ton. And then we have obviously this distribution here that we traded yesterday, and we tested below it and found no interest. So if we are just, very generally speaking, we'll begin with these ideas. If we are just unable to regain this upper distribution that we put in overnight, you see we started to fall through it. If we are just unable to get back into this and get back above really the center of mass up here, which is this stock zone and the prior week's high, if we are unable to get back into this, and that could look like a pullback to here, maybe even as high as prior week's high, whatever, we don't know. Or it could just kind of continue from where it's at. But either way, if we're unable to regain this distribution, then I'll look for lower prices. I'll look for a close of the gap, which is not, is not too much of an ask from where we're at now. So what happens if we get the gap closed? If the gap closes, then the big thing for us to see is yesterday's range supported? So if the gap closes, the first question that we have is, okay, do we just reject these prices and start to rally again? In which case, we start to see support somewhere around yesterday's range. It might be like a little lick check like we had. This is our excess high from yesterday. So a valid place for this to potentially start happening. But regardless, if we start to see upward excursion, then I would be looking on the long side if we reject yesterday's range, and I would be targeting this area, because this is where these zones are where things could fail. So the first thing, if we see support at yesterday's range, then these two zones basically are 68, 76 zone. This is the first area where we could start to hit trouble, and the whole thing could start to fall apart again. Or if instead we get a really nice bullish trade and we're able to push into this area and test the prior week's high, then that is a key target. Prior week's high would be then the real decision decision area where we could either fall apart again or start to rip higher to take out the available targets up here, starting with the naked VPOC from 3.3 and just a zone-to-zone push, really looking for here, the 60-31's the target I've been talking about for a while now. So anyway, what I'm basically saying here is bullish ideas from me at this point, since we've started to lose this area. If I'm going to trade bullishly, it needs to be with support out of yesterday's range. So we push into yesterday's range, get a setup, and it tells me, oh, I'm sorry, trade long. If I'm going to trade long, it needs to be off support in yesterday's range, where I see that we test into yesterday's range, we reject it, and we start to move higher. At that point, depending on where I get on the long, I could be targeting these two zones, depending on where, if I get on at a real good price. If not, maybe they get up into this area, and we start to show that prior week's high is accepted. If prior week's high is accepted, then I would be up to trade for the overnight high and zone-to-zone targets afterwards, looking for the 31s. Do I think we get the 31s today? I don't think so. I don't know. Maybe we could. It's not up to me. Let's also be aware that we could start to see that kind of trade happen, and it could just fall apart around any of these areas with a lower high, which is kind of what I was sort of alluding to. So a lower high would kind of shut off the idea of any long trading. And how could that happen? We close the gap, we push out of range again for another attempt, but we don't get back to the high, we fall back into range. Then longs are kind of on the rocks for me at that point. How could this go bearish? Well, I'm kind of describing some swings that could be bearish trades here. What are they specifically? Well, any type of a rally that gets up to this area, this is the first area where the sellers could start to assert themselves, and we could look for a gap close trade if that's on the menu. I really think that the prior week's high is like the LIS here. Like if we're above prior week's high and accepting prices, then it's longs for the overnight high. And if we're below and getting smoked, then I would look for reversion. Even if I get on a really nice long somewhere, if I see us, if I'm long and we get up into this area and we're not going anywhere, I'm getting flat. Now we could also just sort of from here, just sort of make an attempt, fall back into range. Looks like maybe it's going to be that lick check trade that I was talking about, but we just don't get that high and we start falling lower. If we fall back into yesterday's range, meaning below these two zones, really below the 47 zone. If we lose the 47 zone and start to get into this 37 zone and are unable to revert, then we're quite obviously, we're looking for yesterday's VPOC as the key target. Yesterday's VPOC, a test of yesterday's VPOC would really be, in my opinion, kind of the last. If anybody got long down here, this is really where they would really need to see it start to show some support, because if we lose yesterday's VPOC and we fall into the O's again, and the O's do not show support, then I wouldn't be surprised to see the singles close. That would be a ridiculous move, especially if we open above yesterday's high to get down and test these singles again. But it's not, it's not out of the realm of possibility here, just based on the way that this was a news-driven move and we've kept pushing. This, to me, also, I have to say, this 25 area, this would close off the SOC completely. As I've said, there's kind of, we kind of have two SOCs because of the way that this sort of happened here. So just testing into this mid-century is kind of testing into that SOC range. So we might see a reaction there. But if we fall into this area, like I kind of said, and we get into here and we can't get out, then it wouldn't be a huge surprise to see the singles close. It also wouldn't be a huge surprise to see a higher low based on just the fact this is very news driven. We don't know who's in here. But let's tie it in a bow today. What would our nothing day be? Our nothing day, pretty obviously, if we don't get back above here and we don't get back below here, and we spend most of the day just chopping around in here, then that's very clearly outside in and potentially a little bit more of a ambiguous trade. If we just bounce around in there, that would be a nothing trade. But the key areas for me, really the keyest area is the prior week's high, because that's the biggest situation for me. This 76 zone is also going to be very key to see if we want to get back up into this area and accept prices. But really, I think prior week's high is the key area. And going lower, as I've said, this zone, this mid-century zone right around yesterday's high is very important, but the other really, really important one is going to be this yesterday's VPOC, balanced VPOC zone region. So essentially what I'm just saying here is we could really go the whole way up to prior week's high, fall the whole way down to this 24 zone, and we're really not making a statement about anything. We're just kind of not really doing anything. So that would be the outside in idea. Above here, then I would consider the longs have it, and below here I would consider the longs to be in trouble. But that's what I got for you today. Hopefully this is helpful. 16 minutes ish. It's a little on the long side, but that's what we got for you today. Hopefully this is helpful. Hopefully you're having a good morning. And most of all, I hope that you find some way to improve your trading today that is not dependent upon your P&L. That's what I got for you. I hope this is helpful. Let's get out there and clock those ticks. Ciao.